Good morning, everyone. This is Brad Matheny. Today is the 5th of May, Monday. We're moving into the new month. This is an ES chart. ES is the S&P E-mini futures contract. We're looking at a pretty solid downward trend overnight, down almost 1%, almost 0.9%. Had been a little bit lower. I'm expecting the markets to move downward today. If we take a look at the SPY, and you can see we're trading down at 562, pretty low. This is a 10-minute chart. We had been moving through that excess phase peak pattern. And just as a little side note, for all those people who don't like my line charts, here's a nice chart for you. There you go. Super clean. As clean as I can make it. Now I'm going to clutter it all up. So here we go with the breakdown into the ultimate low. Remember, we rolled through this excess phase peak pattern up over here, rolled up into the peak, flagged, broke down into consolidation, and broke down to the ultimate low. Now, we move into the ultimate low. We come back up. We flag here. Rally up into consolidation, and then rally up into the ultimate high. So where we're at right now, I believe, is the extension of this consolidation range carrying across here and here. We're right in the middle of that consolidation range. We are nearing, obviously, probably pretty close to an ultimate high over here off of the inverted excess phase peak pattern I drew in red. That means that we would be likely setting up some sort of a rolling flagging formation like this. I'll draw it in blue. And then we would be looking at a move possibly deeper. So let me redraw that. Just draw it deeper, possibly down in this area, breaking down into consolidation, and then breaking down potentially into that ultimate low. And that would be a fairly clean representation of what I believe is likely to happen, assuming we fail to get above this 576, 577 area. So 576, 577. Remember, this is really a very volatile market. I went through and did my weekend research. And it's an extremely volatile market. The data I have continues to weaken. In fact, here's the crash index on a weekly basis. You can see here on a daily basis, you're looking at the big breakdown in trend, still bearish. We're going to be potentially rolling a little bit downward today. We'll see how it plays out. Gold is moving a bit higher, but I really do believe we could roll back into channeling over here, just really weakening on out. Dollar weaker, down in the 100 area. This is actually, I think, 98, 99, 100 area is probably a pretty good base for the dollar. S&P overextended. This is here. You could clearly see that pullback flagging mode here in the SPY. And again, it may be a little difficult to see, but here we have the breakdown into that flagging, into the consolidation range, and then up out of that into the ultimate high. I think we're going to roll back down, flag out, break down, and then break down further. That's what I believe is really taking place here. I don't believe that the economy is in any type of a real growth stage as long as these tariffs are playing out and we have uncertainty. I believe that, if you take a look at the transports, which I keep highlighting, this is 1 hour on the transports. We'll go to daily, and you can see the transports have just collapsed. Okay, so I mean, we can go way back here, and you could long term, you can come right off of this support level and this support level and say, hey, Brad, we should be basing bottoming here. Yeah, I get it. Okay. But, you're going back to 2016 all the way across to 2000, the low at 2022. Yeah, we may be basing bottoming here. But I want you to understand that we haven't had anything like what we're dealing with right now since probably the global financial crisis, where pressure was put on the entire globe because of financial market concerns. Now we're doing with global trade, so we could just as easily roll into this sideways channel before we pull on out of it in late 2025, early 2026. So be aware that this is come back over here to weekly. Think of this as stimulus. Stimulus, stimulus, stimulus. Where is a dollar sign here? Currency. Here we go. Stimulus, stimulus. Lots of money. Basically, this was money, 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 print money. Get us out of this contraction. Print money. Get us out of this contraction. Print money. Get us out of this downward contraction. That's all this was. And now with Trump in office, I don't know that we're going to be printing a bunch of money, at least over the next 2 or 3 months, to try to recover out of this. Foreign markets may decide to print a bunch of money and try to pay their way out of this, and by liquidating, like China did, gold or other assets. But I'm not sure that the U.S. is going to be doing that like we have. And if the U.S. doesn't act in some way to offset these tariff issues, we could be looking at a couple of months of sideways downward trading. Okay, the cycle pattern for today is a gap reversal. So looking at kind of in a carryover mode, that would be a rolling breakdown in trend. This is weekly. Come back here to daily. So on a gap reversal, we would be looking for an opening price gap down in this area, somewhere breaking downward, maybe down here, and then trending downward a bit. Okay. Uh, I'm not saying it's going to get down to 550 today, but I'm saying that we're looking at a gapping downward bar, a reversal, basically a reversal of trend coming down. Tomorrow, we're looking at a gap breakaway in trend mode. Could be a carryover downward side, a counter trend breakaway, which could be rotation, carryover of carryover, which would probably be, I think, to the downside, and then an inside breakaway in trending mode. I think this entire week is a bit of a breakdown. Then we move into rally and counter trend mode, which is a breakdown bar, rally and trend mode, which is a support bar, probably pretty deep. Looking at a carryover and carryover trend, I think this could be a little bit of a downward trend. Then we get a crush pattern in a downward trend. I think that'll be a down. Then we get a gap potential into the 16th. And then we get a gap breakaway in trend mode, harami inside breakaway, breakaway in counter trend mode, and then a carryover in carryover. So we got this week here, the 12th through the 16th, basically is going to be very, very volatile. Maybe our breakdown into consolidation, maybe a very strong breakdown. So we've got to see how this plays out. That's right here, the 16th. So that's right in this area here. We could have some extreme volatility. I'll draw that maybe as a box. pretty much right in that area. We could have some extreme volatility. Okay, QQQ looking for the same kind of thing. Looking at a rollover here. We're off 0.88. We'll have to check the news, see what's coming in. Like I told you, I think we could be looking at a volatile time frame here, right around this time frame. Again, watching also the middle area of this channel. So, this 618 area, basically from here to here, I see that as very solid resistance, support, the battle zone. So, getting price back down into this area, if it happens, through some kind of a breakdown, flagging, breakdown into consolidation, and then breakdown into an ultimate low, could be very interesting. Could be very, very interesting, especially watching price get below this big recovery level right here. So that would be 467.50 roughly on the QQQ, and that would be pretty much right here. 547, 548.50. So that would be a very solid breakdown level into this big consolidation zone. And once we get into this consolidation zone, we could roll pretty hard down to the downside. So we'll see. I mean, I think this is the broad consolidation range here, but ultimately it could get a little deeper. Okay, gold and silver. Gold and silver are up a bit. Spread this out. This is a 4-hour chart. Let's come back over here to hourly. And come back over here to hourly. Silver's moving a little slower to the upside than gold. Gold is making a decent little move to the upside. Gold is up 81 bucks, up almost 3%. Nice solid rally. We're looking at the gold pattern today as a flat down pattern in carryover. Obviously not too flat down overnight. Once we get up here into regular trading, we may see this kind of flat down a little bit. Flat down is really kind of just a sideways rolling downtrend. But again, I think we're looking at I think the markets are really trying to settle after the last couple of weeks, after earnings, the big earnings. And I think we're going to be moving back into what I would call price normalcy, where price is going to try to protect against risk, against the hedging of the global market, against a slowdown expected. Remember, based on news out of Long Beach, California, we've got about 3 or 4, maybe 5 weeks of supply left at the port, and then things are going to start to run out. And until we get this tariff thing resolved, I want you to think that 3 or 4 weeks is going to come pretty quickly, guys. And we might be starting to see some supply issues, hitting in the next 1 or 2 or 3 weeks. It could depend. It really could depend on how things work. Ultimately, I really do think that, gold, is going to try to get back up into this 3,500 area and then back higher. And silver likely to try to get back up into this 33, 34 area and then higher. So gold and silver are very, very undervalued. You come down here to a 4-hour chart and over here, to a 4-hour chart. And you can see that, getting back up into this level after this big selling phase, this contraction phase, which, was tough. This was a lot of news driven. I don't want to say manipulated, but let's just say news driven contraction in the market. And like I said, I think, and unless we get some tariff resolution, I think we're looking at a fairly solid rolling upward trend here, trying to break out of this consolidation zone. You can see the consolidation zone across here and here. Really need to see metals attempt to rally back up out of this before it can make the next big move. Okay, now we'll take a look at Bitcoin real quick. 94,000, it's rolled over. Okay, so this looks like our ultimate low. Where's our flagging? Well, it's kind of hard to see it, but it looks very much like the S&P right now. And look at how clean this is, empty. Okay, take a picture of this, guys. Completely empty chart. Ready? Here we go. Drawing away. Down to our ultimate low. Coming back up. Flagging right through here. Moving up into our consolidation range right up here. Breaking up into the ultimate high right up here. Rolling potentially downward here into flagging. Rolling then potentially downward into the consolidation phase, and then rolling potentially down into the ultimate low, somewhere down there. So, assuming this consolidation phase stays somewhat similar to what we had back over here, you can see that zone of consolidation right through here. I would expect that would continue to be consolidation over here. It makes sense to me that failure to get above this level, remember, price always attempts to make new highs or new lows. So it did. It broke above this level. And now it had to try to break above this level, which it's failing to do right now. If it fails to do so and breaks below these lows right here, then we are technically moving downward at that point. So right here would be a downward move for Bitcoin. Getting below this low of 92,000, call it 900. We're only about $2,000 away. Then we'd be looking at flagging and then a breakdown into consolidation, then a breakdown to the ultimate low. So we'll see. We're still in that big, broad flagging pattern. You can see it here. Big, broad flagging kind of consolidation range. Here was our original excess phase peak pattern right up here. We broke down into flagging, which is basically from here to here. That's our big broad flagging range, guys. And we're just rolling around in flagging. If we get out of this flagging mode on a breakdown trend here, then we could be moving into a big ultimate low. And where we would be looking at here is we'd be looking at setting up a new pattern, which would be the rally on up, the flagging over here, the breakdown into consolidation, and then potentially the breakdown into the ultimate low. Again, these are all price constructs. This is how it works. And I'm glad you guys, by the way, I got a message from somebody, new follower, and he asked a question about the excess phase peak pattern. It's great. You guys are getting it. That's wonderful. That's what I'm hoping you guys see. Now, we're going to start working on different layers so you can see how these all stack into one another. Again, kind of like Legos or building blocks. The whole idea is I'm teaching you price constructs. This is what happens. This is how price builds trends and moves through flagging and trending. Learning to catch these things, learning to find them, learning to see how things are playing out and paying attention to the bigger picture. Like, you guys probably wouldn't have seen this big, heavy one unless you come out here and start looking at this. Now you'll see it. Now you'll come up here and go, yeah, I see the little one. And now I see the big one. The bigger one in this heavy blue marker is indicating we're getting a good solid roll. We're failing, move down into consolidation, and look at how clean that consolidation level is. I mean, not quite perfect, but sets up a pretty solid range right back down where we had consolidation before. I mean, technically, I can move it right up into here, but price is the ultimate dictator. Okay, now, some of you have noticed back over here, these are my comments. Some of you have noticed that I have been posting these trade results here. These are the TT scanner algo setup. So now understand, I give you these morning videos to try to help you. This is really designed to show you my cycle patterns, prove that they work. I started it back in, I think, May or June of last year. And the whole point is I wanted to show you how these things work. The cycle patterns are not 100% accurate, neither am I. I'm not perfect. I wish I was. But again, what I'm trying to also show you is that intraday, I have a bunch of technology running algos that teach us, what to do. So here we had a new long trade in XLB yesterday. Happened at 9 o'clock in the morning on the 2nd. Entry price was 84.52. Target price was 85.29, then 86.03. So you had target price 1, then target price 2. Stop price of 84.36. We were already up 0.17% profit in the trade. The thrusting number was 62.77, which is very positive. The profit factor was 1.09. The win-loss rate was 1.90. The way I explain that to you is that anything technically above 1 or 1.2 on the profit factor with a win rate of, say, 1.8, 2.0, you're going to do okay. When you get into something like this, IWM, where the profit factor is 0.41 and 1, and it's not performing great on a 60-minute chart over the last. This is normally about 5 or 6 months on a 60-minute chart. But again, 1.31, 2.82, lovely. XLU 0.44, 0.75, not so good. 0.72 to 1.44. Okay, that's half of it. So the way I look at it is, this is maybe a half or 2/3 position. This is probably a quarter position. This is probably a half to 3/4 position. This is probably less than half, probably a quarter position. This is probably a quarter or a third position. This XLC, look at that number. Now you're rocking. Okay, that's a half or 3/4 or a full position. And XLI, this would probably be about a half or 3/4 position on this trade. You use the profit factor and the win rate to determine how aggressive, how you want to allocate your trading. Something that's trading like this, profit factor and win rate, doesn't have a great potential. It's not consistent as much as, say, this is. So this I can be a little more aggressive with, where this I want to protect my profit, protect my risk. Now, then we end up with the bull bear ranking and the bull bear shift. So, sorry, you get bull bear shift first, then bull bear ranking. So this was an 8, and it has come down by 4 recently. So an 8 is a very positive number, but it's come down by 4. This was a 7, and it has come down by 3. This was a 7, and it has recently come down by 3. This was an 8, it has come down by 4. This was a 3, it has come down by, or up by 1. This was a 5, it's come down by 1. So this gives you an idea of how trend is, and the way this works for trending is these ranking numbers, operate kind of like this. So, you get into like a 1, a 2, a 3, a 4, a 5, a 6, a 7, and maybe an 8. So the idea here is it's a sloping mechanism showing you about how strong trend is to the upside. So typically we're looking at trading right around this 4 level or better because we get good solid trends. Now you can take trades that are not up in that 4 level if you want, but historically 4, 5, 6, 7, 8 means we're moving into a parabolic trend. So you look at this and you say, okay, here, what is this trend? You look at that, try to find it over here. It'd be a 2 or a 3. Then you come over here and you look and say, oh, now that's maybe a 5 or a 6 or a 7. And then you come over here and you go, hey, that's like an 8, 7, 8, 9. Okay. And that's exactly what we're ranking over here on top of other factors. So when you look at these trades, what I wanted to show you, and they're only available, anyway, they're available on my website, but I'm sharing them with you right now because these are the trades. Okay, here's the algos running live. This is what you would normally see. Here's the 60-minute. This is the ETF scanner list, and you can see all these trades that are being generated. This was as of Friday. Okay, we have a trade here from 10 in the morning, it's up 1.61%. Trade here from 12 o'clock, it's up 0.49%. If it hits the targets, you'll see them in pink. So when you come over here and you look, here's some trades. ITA hit 2 targets, up 2.56%. I actually got in the trade on Thursday last week. Here's another one, 10 in the morning, IGM got in a trade, hit the first target, up 2.6%. And then, of course, we have this over here. Here's XLY up to the first target. And that's in 1 day, less than 1 day. Here again, SOX, 2 targets up to 1.82 in less than 1 day. And these are designed to basically give you an idea of how to trade. Now, remember, you still use this data to determine how you want to trade. 1.30 and 2.9 on the QQQ, great setup, great consistency. You can trade a full position or 3/4. 0.83 and 1.81, that's about a half allocation. 0.50, 0.84, that's probably a quarter or a third. 1.07, 1.72, that's probably a half or 2/3. 110, 2.5, that's probably a half or 2/3. 61.61 to 110, that's probably a half or a third. Here, 45 to 89, that's probably a quarter. 1.24 to 2.48, that's probably a half or 2/3. The bigger the number, the bigger you get that. Let me find something if we got one, if there is one. Nah, well, I mean, these ARKK, that's a pretty big number. That would be 3/4 or a full position. So anything that's close to 2 or above 2 here would be considered a full position. So close to 2 or above 2, this could be a full position. This is about a half position or a 3/4. And this probably is a full position, 3/4 or a full position. And it's because we're getting very strong numbers. This is a very strong number comparatively. Okay, guys. So a little longer video this morning. Just wanted to show you what's going on. Remember, the intraday stuff is really, you get 60-minute, 15-minute, 5-minute. I'm going to keep sharing some of these with you, but the intraday stuff is really what you guys are probably looking for, in the sense that I'm giving you the cycle patterns and what I think is going to happen. But a lot of you want to know what's going to happen on 1 or 2 or 5-minute trending. That's something I just can't deliver for you every, 3 minutes as a video. It just doesn't work that way. Okay, back to the SPY. And remember, we're going to watch how this plays out today, potentially rolling downward. We're getting a little bit of support here. We'll see how the market opens, but I'm looking for that rollover. See if it happens this week. Okay, guys, talk to you later.